Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So the S&P 500 has finally given in. We have seen the stock market crash that we have been talking about on this channel for a while. I've been saying that this market has been too powerful, too long. The markets have been overbought for a while. And ever since the end of 2018, it has been pretty much a non-stop rally with tremendous gains, the type of gains you really would not see within an entire year. And so I did make a few videos over the course of 2019 talking about the greed in the S&P 500, about the fact that traders should not be overconfident, especially after a 10-year bull market. To see this kind of breakout is quite surprising. And so more specifically, we recently saw divergence here. So the price was continuing on higher here with the MACD and the RSI starting to go to the downside. So that is a sign of a reversal. So you can check out my last video. I cover this and I talk about signs of reversal in the markets, which is exactly what happened. I talked about a potential correction either in price, which is exactly what we got, or in time, which would have been a more lengthy correction, which is not what we got. But either way, I was confident that the upside to the S&P 500 was limited, considering the incredible gains that we have seen over the past couple of months. So it was time to reduce the the long position in the S&P 500, and increase, if you are an active trader or swing trader, increase your short exposure, which is exactly what I talked about. I talked about a back test of this trend line. We were backtesting, which can be bearish if you are rejected off of the trend line. So this rejection was definitely bearish, and then we had a huge sell signal here when this trend line that I was following got broken. So this was a major sell signal. And again, that is something that I've been talking about for a while on my videos, and that is that you always have to be prepared for some type of correction in the markets if you are invested in the long term. So that is one of my strategies, is to have a long-term position that I follow very closely, but I do watch out for potential short trades which could hedge my long position in case of a stock market crash. So that is the summary of what has been happening and what my position was right here at the top. Why do I think the stock market crashed? You'll see a lot of headlines talking about the coronavirus, saying the concern for the virus is increasing. My personal opinion on that is that it has absolutely nothing to do with what we're seeing here. I think the market has, as I said, has gone ahead of itself, and many people were expecting some type of a correction right here in this zone. And as for the corona virus, I think concerns about the coronavirus have been existing for a while, and I doubt very much it has enough impact on the markets to create such a drop. There are not that many cases in the US, and it's definitely something that's been around for a while and would not cause such a drop within a week. I think the real cause behind this are margin calls and forced ETFs. So margin calls are extremely dangerous in these kinds of situations where the stock market is extremely bullish. The bullish sentiment is over the top, and that is also something I discussed recently the greed indicator is extremely high, or was extremely high, and that is when you get margin calls, people leveraging their long-term position in the S&P 500, and when you get a small drop, a break of trend line, people are forced to sell their position, and that creates a huge drop in price. And that's precisely what we got here in 2018. Right here, people were overconfident after this rally. We had a huge a breakout from this high, and the margin calls started acting right here when the stock market started waterfall selling all the way to the bottom. Now, if you did take advantage of this correction, well, congratulations. I hope you made many profits. I personally just got stopped out of my short position, so I did have a short position from the break of trend line, lowered my stops along the way, and I just got stopped out. You can see we're starting to make a nice green candle here as I'm making this video. And that actually brings me on to my next point, which is what is next for the S&P 500. Are we just going to crash all the way back to this level, or are we going to get some type of a rally out of this, or are we just going to bounce straight and recover to all-time highs? For now, that's very difficult to say. We'll have to see how the markets react, but I am very confident that we will get a snapback rally, and um, it's unfortunate I didn't make this video sooner because we are starting to see some nice gains right now, but I did start a long position from this support level. I wish I could have made this video sooner again, but in my experience with corrections like these with margin calls, you tend to get very quick and aggressive snapback rallies from a nice support level, which is exactly where we are. This is definitely a nice support level. And with forced selling, what happens is the market goes down too far and people take advantage of this and invest into their long-term position, which makes completely sense. I mean, people were buying long-term positions right here, so why wouldn't you buy long-term positions at a 15% discount? And again, that is also something I talk about a lot on this channel, is that, I am, even when the market is grinding higher and higher, I am looking for short opportunities simply because they can offer discounted price for a nice long-term investment in the S&P 500. So this rally could really take us all the way to this resistance level. For now, that's probably the target I would set, the most probable target for now, anywhere between the 3026 level and the 3100 level. So from the bottom, that would be a almost double digit, a almost 9% snapback rally, which would be a nice little profit. And from where we are now, that must be around 5% profit. So again, a nice little snapback, and it does have the potential to morph into something more. So again, that's something I try to talk about on my channel, is the way you handle a trade is by having a stop loss. So when you do hit the first target, well, you would increase the stop loss to just below the target, and when you hit the second target, you raise the stop loss to just below the next target, so that if the prices start to come back down, well, you book the profits that you got from this point all the way to the stop loss. And the reason it's very important to do this is in the case where this is more than just a simple snapback rally and we go back to all-time highs, well, you'll have made a long-term investment that you can actually keep and head on to all-time highs and grind higher as the SP 500 increases in price. That being said, I had been increasing my bullish outlook for the S&P 500 with this big breakout, but this huge drop in price, which was not surprising, but definitely not 100% predictable, definitely does decrease the bullish outlook and increase the bearish case. We are now below the all-time high breakout that we had here. So that makes this entire breakout officially a false breakout. So that is definitely very bearish and can have longer term consequences on the markets. We're going to check out the weekly chart, and you can see that we made a bearish crossover on the MACD. You can see we had a bearish divergence on the RSI here with two overbought readings. That's extremely bearish, and I think that is something I mentioned in my last video again. And more importantly, we made a huge red candle here, something we haven't seen in a long time. You can see on this chart. Let's go back to 2008, and that is the kind of candle that we did see during 2008, but almost nothing of the sort since then. I think we had one in 2011 here and one here, but nothing of the sort in 2015, and no candle that big in 2018. And the size of the candle definitely has an impact on the longer term technicals. The bigger the green candle, the more bullish of an impact it will have, and same thing for a red candle. It can have very bad longer term consequences. So that's about all I wanted to cover on this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.